All right, guys, welcome back to another episode of the podcast. And I am here with U.S. Army veteran and Wall Street Bets trading legend, maybe archivist, storyteller,
Okay.
I
Don't give me
don't know,
too much credit. An enthusiast.
enthusiast. There you go. Mikey Millions, leader of the Theta Gang and owner of the Kamikaze Cash channel. Welcome.
Yeah, thank you. Glad to be here. Thanks for having me on the show.
Yeah. So uh, I am just super curious. I love the freeloader challenge. I think that's actually how the algorithm showed me your
Mm.
content. But um, yeah, I'm fascinated by, I'm
Yeah,
fascinated by
yeah,
Wall Street Bets and the world of traders. I don't know. Do you want to give us a little bit about your background, how you ended up
yeah.
as a
Uh-huh.
weird finance YouTuber?
Yeah, I mean, in the finance world, there's just so many things happening all at the same time. Everybody's got their own approach to how they want to invest. Some people are interested in investing, but they hate the risk, or some people just love the risk and chase after it, like we see on Wall Street Bets. There's so many different angles to come at finance from, and it's always a growing experience. So for me, I started off with a lot of very kind of low risk type stuff, got really, really aggressive into it, and now I'm realizing there's a place for all kinds of different trading strategies. You can do the freeloader challenge, which I also really love. It's really ambitious, but I'm having a fun time with it. And then you've got all the YOLOs and stuff that go along with it. And every once in a while, you get to see somebody make $1 million or lose $1 million in a few hours on Wall Street Bets. So there's so many different fun things I love about this. And the fact that I even get to do it as a semi professional career, that's a tremendous amount of fun for me.
Yeah, it's I have been one shocked at like the niches that people can carve out as content creators, and when you can, the best are always going to be ones that take something they love anyway and
Mhm.
combine it, make entertaining videos with it. um and yeah, it's been strange. Like I imagine we're probably around the same age. Like I'm 35, so
31. Yeah.
yeah, so like being a YouTuber in your 30s, it hits different, as I always tell people. They either think
Yeah.
you're
Yeah.
like completely delusional, like telling people you want to be a rapper, or they
Mhm.
believe you're like making Jake Paul money. You're gonna be boxing other YouTubers in no
Yeah, there's a
time.
lot of room in the middle for those. I mean, it's funny because when I tell people over about 40, maybe over 50, that I'm a YouTuber, they look at me like I'm some kind of kid making dumb memes or gaming channel. And then when I talk to people who are in their 20s, they think it's the greatest thing in the world. And every once in a while, I'll find somebody who actually has seen me before on YouTube or something like that, and they get all excited about it. But by and large, yeah, I got to kind of quantify what I say to people when I tell them I'm a YouTuber as a profession. Like I have to actually tell them I'm a full-time content creator with sponsorships and things like that. Otherwise, they don't take me seriously for the rest of the conversation.
Yeah, yeah, I've definitely had that. You definitely learned the euphemism of, I'm a content creator.
Yeah, you have to, especially when it comes to things like when you tell your in-laws that you're going to quit your job at the Pentagon to become a YouTuber, they look at you like you're crazy. That is a tough sell, you know. Same thing with, your own parents, your own family and stuff like that. But when you talk to people your own age, everybody kind of gets it. Like there's a lot of room to grow up in YouTube.
Yeah, yeah, absolutely. And so okay, I didn't realize you were at the Pentagon. I was actually at Homeland Security and had basically the same trajectory,
Mhm.
the same weird conversations with my parents where
Yeah.
I had to explain to them that, I had to show them the numbers. So can you take us a little bit through your background? How did you go from, making questionable trades as a high schooler to the Pentagon to making YouTube videos?
Yeah, I mean, so it's a long story, but it's one that it's not too uncommon. I think there's probably a lot of people that have been in the same boat as me, or at least pretty close to it. So I grew up in New Jersey, and it's going to get dark real quick. But on 9/11, I went up on a hill right near my house, and I was able to see the smoke coming across the towers when they had fallen. So I know my dad had been in the army when he was in his 20s. I knew right there I was going to do something in the military or national security, something like that. And I had these big dreams, 10 years old, wanting to be the director of the FBI one day. But I mean, that all starts off somewhere. So for me, it was keeping that in the back of my mind that I wanted to join the military. And then they've got in high school, they have the Marines come out with their swords and their push-up competitions and their carabiners and all their, their oorah stuff. And I thought initially that was the way I wanted to go. I wanted to be a Marine and wear the snappy uniforms and stuff like that. I am so glad that my dad talked me out of it. He said, like, they come in, they put on this great show for you. They get you down to the recruiter's office, and you never see all these different options, ways that you can serve. I didn't even know what an officer really was when I was ready to join the military. I thought it was like Call of Duty. Everybody joins as a private. You work your way up, you make sergeant major, then you get promoted to lieutenant. And so I figured there's no alternative. You want to join the military, you show up and you tell them that you want to shoot guns and they take you in. But then I found out about ROTC, and then I could actually go to college, learn there. Then, you get that fast track to the officership, and you've got a lot to learn very quickly. Because second lieutenants, they don't, literally, you don't last long in the military. You have to either learn or you don't make it very far. So I finally so once I got to college, did ROTC for the 4 years, got to go to college for free, which anybody who's listening right now who's looking at, where do you want to go to college? How are you going to pay for it? Seriously, consider applying for an ROTC scholarship. You can get whatever degree you want to, entirely paid for by the government. And if you don't really want to join the military afterwards, that's fine. You can finish ROTC and join the National Guard or the Army Reserve or Air Force Reserve and be like a medical service officer. And it's probably the easiest job that you could get and get school paid for. But I went into military intelligence because I had these big dreams about being, working at the Pentagon or being a FBI director or something like that. And once I, finished my training for military intelligence, I went to Italy first, and the 173rd, I became a paratrooper. Then came back to the U.S. for training, and then went off to Korea. So I've spent most of my career overseas by that point. I came back to the U.S. for one final assignment in Georgia, and then got out of the military because I was so allergic to fire ants, which I found out that year, that I was no longer suitable for service. So they medically retired me. Then I got a job with Booz Allen working at the Pentagon, which honestly was a great job. I was on the 24-hour watch floor. I was, two phone calls down from the chairman of the Joint Chiefs. So it was a pretty prestigious place to be, and that's kind of what made it hard to leave. But at some point, you're going to want to move to something that you really enjoy for work, not something that just feels important, but knowing that you're just a cog in the machine. So I stopped working at the Pentagon. I quit my job at Booz Allen the day before my 31st birthday. That way I could say that I was semi-retired or financially independent by 30. It was the day before my 31st birthday. Throughout most of that time, like toward the end of my military career, like when I was in Georgia, I started getting serious about YouTubing. And that's when I discovered Wall Street Bets. Would have been toward like the middle of 2000, summer of 2019, right before the moment when we watched that control the narrative, lose all his money on that infinite money glitch. But I had so much fun making YouTube videos that I just continuously did it while I could, where I could in between my work. And then things kind of took off. So that's when I realized I don't need to continue working 24-hour shifts at the Pentagon. I can just be a YouTuber. And I took a lot of risk quitting my job, but I think ultimately it was a good choice.
Yeah, yeah. So you're married, right? What did your
Yeah.
spouse think when you were like, "Hey, I want to pull the trigger on this"?
I think she took it a little bit better than I expected her to. I thought she would think it was the craziest idea she's ever heard. But I tried all kinds of different approaches to get her to see that this was the right move. I tried just handing her, $750 in cash once to show her, like, hey, this is the amount of money I made from a sponsor this week, stuff like that. Nothing there really moved the needle. What I did do was put together a couple of, um, I don't remember if they were PowerPoint slides or like a Word document, and I just kind of laid out this is what our finances look like right now. This is what I expect them to look like after I go full time on YouTube. And it didn't really quite play out as I expected because being home now, working from home, doesn't necessarily mean that I have more time to work on YouTube. I mean, I have some more time versus when I went to work, but being home, working from home with a 2-year old, it's not quite the same as working from home when you have no children. So I didn't get quite as much time to work on YouTube as I thought I did. So I didn't quite hit the numbers I was aiming for. But I think I'm probably still making approximately the same amount of money now as I was when I was working. So that goes to show, if you commit a little bit of extra effort to something, you can work fewer hours during the week and still come out on top versus both YouTubing and going to work.
Yeah, yeah. I mean, it is so. I mean, I think that as both former military who are now full-time content creators, I definitely feel like the military, or at least being in the military on the O side of the house, or like probably if you were like a senior NCO, you'd have the same thing. But just that like ability to set your own schedule, keep to it, not need to be like point and directed is so essential to being a content creator, because it's like ultimately only one person is going to keep you on track, and it's you.
Mhm.
And so
That's why I can wake up at, 5 o'clock in the morning without really having a problem with it. If I need to crank out some extra work, I got no problem waking up early or working odd hours or multitasking because you get so much experience doing something like that in the military that it comes naturally now.
yeah, yeah. I mean, it's I mean, as you said, like I always enjoy sort of seeing some of the like negative takes on the military, especially now. I've heard that recruiting has just been absolutely crushed, that they just cannot get folks to sign up. And I'm just like continually shocked when not only are the benefits so good, and people in the comments are gonna be like, "You're shilling for the military. You're shilling for the military." I mean,
With
listen,
good
it's
reason,
hard.
though.
Huh? Yeah,
Yeah.
right. It's like, how do you not shill for something, for an organization that you know paid you to go to college? I mean, because I assume you had the same scholarship I did, where they paid your whole tuition and then sent you like a $500 check every month, just like,
Yeah.
"Hey,
Yeah.
take care of yourself, bud," um, and pay you like a real professional job when you get out. I mean, I'm sure the Pentagon wouldn't have given you a second look if you didn't have a bunch of, you know,
Mhm.
MI stuff in your resume, and probably a
Yeah.
clearance.
I mean, you think about all the advantages you get when you join the military. I mean, you could be 18 years old with a GED. As soon as you join, you get your full health care covered, which in the US is a big deal. In other countries, it's not so much. In the United States, that is a tremendous deal. Saves you easily $500 to $800 a month immediately. And then if you have a family, you're talking about saving $1,500, $2,000 a month just in healthcare premiums. All that is taken care of by the military the minute you join at 18 years old or whenever you decide to get involved. You're getting education the entire way. Whether you actually go to college or not, you're getting college credit. So you can get an associate's degree without doing any work other than your own military training for which you're getting paid. So now you have no debt, you're getting paid immediately, your health care is all taken care of. You got the most generous retirement plan that exists, other than unless you're like, a senator's son and you can get into some kind of like government position. These are things you're not going to get anywhere else at that age, and I sympathize with the people who, they finish their college degree, they're $85,000 in debt that they have to pay interest on, and they're struggling to get by because it's tough to make ends meet sometimes. But with the military, you're set up for so much success. There's really very few excuses.
Yeah, yeah. Even now, and I've been off active duty for, I don't know, I left out 2013, so 9 years. It's still my healthcare, the VA. Like, people dunk on them, and like I've never needed like really specialized care. But dude, I spent $100 this year on healthcare, and you're like, what? Where else are you gonna do that? You know? And it's the rest
You're
of
right.
my life. It's if people fully understood the benefits of the military, they would have to beat people away with a stick, like
Yeah.
truly. Even
And
just
let's
doing,
not forget. Let's not forget either. Everybody who gets out of the military is going to get some kind of pension from the VA. I mean, it's very rare that you see somebody get 0% VA pension. Everybody's going to get something. So you're already locking yourself in for a pension the minute you join, unless you quit within the first few months and or get kicked out for drug addiction, something like that. You're going to get some kind of VA pension, and that's something you don't get that anywhere else now. You get your 401k match, and that's all you get as a retirement plan. Military takes big care of you. We sound like shills right now, or
yeah,
recruiting.
yeah, yeah. I mean,
With good reason. I mean, seriously, anybody listening that you don't have to walk around Baghdad with a shotgun to be in the military. You can be a dental hygienist at a Air Force base in Florida or a Coast Guard station somewhere. It's basically the same as having a normal job. You just get so many more benefits for it. And I credit the military with my ability to get to where I am now. Because without the military paying for everything, while stuffing my pockets with money and then giving me a pension and health care, There's no way I would have been able to take the risk I did when I quit my job. I would still be working at the Pentagon as a civilian and then YouTubing on the side.
Yeah. Yeah, no, I'm in the exact same boat. Yeah, I
Mhm.
when I was with DHS, they added all my military service onto my pension, so, you know, I have basically the pension of someone who's been working for the government since they were 18, 20. Um,
Mhm.
so yeah, it's like, I have healthcare the rest of my life, and I'm like, okay, like now I can take all these risks. And I think
Mhm.
it's just like trading, there's no zero risk trade, right? But the risk and the reward are what make big trades, like let you be able to do big trades. And when you have, it's like Goldman Sachs or JP Morgan, right? They have the deepest pockets in the industry, and it lets them take some banana size
Mhm.
risk, but you can only do so when you're, sitting
Yeah,
on
you need
that
that
much
foundation under
coin.
you.
Yeah,
Right. You
exactly.
need to have a solid foundation under them. And that's why I always recommend to people, especially when they start trading, focus first on getting that solid foundation underneath you before you start worrying about managing your spreads. Like you don't need to worry about how to run an iron condor if you don't have any buy and holds in your portfolio. I mean, that foundation should look like a maxed out 401k, a life insurance plan, and all the investments, at least for the first $10,000, going into blended or growth ETFs and then maybe some dividend ETF on top of it. Once you have that foundation underneath you and your debts are pretty much under control, now is the time at that point that you start learning the more complicated strategies.
Yeah, yeah, and that's funny that I think we've come to the exact same conclusion. There's investments that are like for my family, for me and my
Mhm.
wife, and those are like boring and lame and just, Warren Buffett approved. Uh,
Mhm.
and then I have just a couple dollars set aside that are just like, you know, they're not, I don't YOLO them, but I could YOLO them. Like that's the
Mhm.
intent, is to just be like, I like this company. These guys are doing something good. Like, yeah, let's go long here. So
Yeah, I mean, it's okay to get excited about something and wanting to
yeah,
invest into it. The only people that I know who only invest in Warren Buffett stocks or just straight up blended ETFs, the only people I know who do that do it through their 401k at their company. They have no idea how many shares they have. They have no idea how much money they have. They just let it ride in some account. They barely even know what's in it. Nobody I know who actively trades and adds more money and focuses on finance just does ETFs. Everybody at some point, probably even pretty much the very beginning of when they invest, they still pick and choose companies that they want to invest in. And I don't think there's any problem with that. It might not work out every single time, but you're taking prudent risk if you're doing it responsibly, and that's perfectly fine.
yeah. And there's only one way. It's like working out or doing anything else. You got to get reps in, and
Mhm.
the only way is to sit there and be like, okay, I'm gonna fire up, look at these 10Ks. Do the math, plug the numbers into the spreadsheet, make my, walk yourself through your case, and take your chances. Um,
Or do what I did for my very first investment, where you type in three random letters on your keyboard, buy, and pray. And honestly, it worked. One of my very first investments ever. I typed in GGC on my keyboard, just threw my whole account into it. It was only a few $100s. Now, at the time, that was Georgia Gulf Corp, and I didn't know what that did, but I just, all right, whatever, buy as many shares as my portfolio can handle. I was just so excited to start investing. GGC doubled in price, merged with another company called Alpha Natural Resources, which is a coal mining company, and then doubled again. So I like 4x'd my money on one of my very first trades ever. Now that company's bankrupt, but I had sold it prior and I ended up making a huge profit on it. I thought this was the golden ticket. You don't really have to do any kind of real financial analysis or risk management. Just buy something. I was under the impression that every stock starts off as a penny stock. Like, because if you look at Microsoft, given all its splits, it looks like the thing used to trade for like a dollar. So I was thinking that every stock out there, the next generation of big stocks, is going to be one of these penny stocks. And just throwing my money into it, you get lucky a couple of times and then the whole thing crashes. And I've got a whole video on that called the Sponge Tech something or other.
oh yeah, yeah. I saw that the I'm trying to think. Oh yeah, there was the Bad Sponge. There's another podcast that has almost the exact same story, also with two pretty degenerate traders called Trillionaire Mindset, and they have the same story about penny stocks, except theirs was a thing you put in your gas
Yeah.
tank to make it go faster that he invested in, and then it like totally
Oh,
went bankrupt.
I've seen
Um,
those. I saw one of those recently too when gas prices took off to like five and a half, $6 a gallon. People were talking about there's this like pill thing that you can put into your gas tank and you'll get better mileage. Basically, all it did was like cleaned your, I don't know, your cylinders or something. You only need to do it once, and it's like preventative maintenance. But people were just dumping these things every single time they filled their tank, and they ran into all kinds of problems with it voiding their warranties, or it would cause like too much corrosion inside their engine. But people were just trying to get more gas mileage out of this. I have no idea what happened to the company, but I'm assuming, based like so many of these other types of scams, they ended up running off with the money, and anybody who had invested into it just went bust.
yeah, it's funny nowadays that you have, one in this market, finally, the strategy of throw money at any investment and it will go up is finally, the stonks always go up is finally not true. And, it's a lot of people are going to get burned who have considered themselves good traders, but are in fact just speculators. And you see it with crypto, right? Like the crypto pump and dump, and but it's not just crypto didn't invent it. I mean, there's a reason Jordan Belfort is now a crypto guru. It's because he's a con artist,
Salesman. Yeah.
and he did it with stocks. He was running scams with penny stocks before anybody ever heard of a, Marshall Rogan Inu or whatever your favorite shitcoin is.
Yeah, I mean that's what a lot of these things are too. The shit coins, they're penny stocks. Like there's really no product behind it, and if there is, it's really not a very good one. Nobody's investing into it because they actually want to own the coin for its utility. They're just investing in it because they think the price is going to go up. It's the same exact thing you do with penny stocks. And crypto is even so much less regulated than stocks. It's another layer of speculation on top of it. You can see a penny stock go up 100x. You can see a shitcoin go up 200x, 500, 1000x without, within days. People they want to chase that. I think that's okay if you understand from the very beginning that this is a speculative investment and you're more likely to lose money than you are to gain it. That's why I think it's so important. Get that foundation underneath you first. Growth ETFs, maxed out 401ks, IRAs, get some dividend stock in there too for the stability. Then you can start throwing $1,000 at a shitcoin, and it wouldn't be a big deal if it went belly up.
Yeah, yeah. Again, risk management, bankroll management is just such a skill set. And I imagine, do you ever feel like your background in MI sort of helped you understand like how to do the research or how to assess the risk?
I mean, probably to some extent. I think it made me because you learn how to do better internet research when you're in MI. Like, they have entire classes on how to do that. So I think it does help me find information a little bit better. I'm more easily able to spot something that's deceptive, or this web address, there's something funky about it, or this message coming across a board, this is not made to look like an advertisement, but I can tell that it is because I'm used to seeing deceptive tactics. And there's plenty of people out there that can do that. I think I was primed for a little bit earlier. I was less vulnerable to deception because I had some training on how to identify things like that. But I also do believe that there are people who aren't proficient in that skill. Even if it's just 20% of the population, that is a fantastic target for a scammer to go after. That means there's 20% of people out there who aren't going to be able to tell that this bullish message coming out across social media is actually a paid endorsement from somebody, or it's just a straight up scam. And a lot of people won't realize that, and they'll invest into a fraudulent product as a result.
Yeah, yeah. I mean, the scale and scope of deception online is, you know, frightening to me. And yeah, I did when I was in grad school, I did some research into sort of online information operations by like state actors, Russia and China primarily. And just like so the thesis I did was I actually ran the numbers. I was like, okay, what do we know that these guys spend on information like propaganda, basically? And how much could they actually get? And the answer is like hundreds of millions of comments and likes and posts and just like engagement. You know,
Yeah. All you
it's
need is a few bots to start pumping something, and next thing you know, it'll go viral.
yeah, yeah, you get the bots to amplify, or you find people who are already who are just dumb, right? Like in the case of crypto, you would find someone who actually shills for your token, but you just amplify them. You know, you just raise the profile of their message, like you said, use a botnet to make it look like it's a high engagement video or a high engagement post.
Yeah, get
And
the hashtag trending.
right. And then you can sucker in people who even sometimes sophisticated actors because again, it's some of them are paid shills, but some of them are just dumb people who are shilling for something, who's sincerely shilling for something, believing it's not a scam. It's like
Yeah,
beating the
or
lie
just
detector test, you know? It's not a
or
lie
just
if you believe it.
speculators. You know, I mean, there's I've invested in shit, not invested. I've traded shit coins before just because I felt like I could get in and out fast enough to make money off of it. And sometimes you do, sometimes you don't. I definitely don't think it's something that's sustainable. When you see something trending and you think it's going to trend a little bit longer, sometimes it's tempting to just go ahead. Let me throw 500 bucks into it and see if I can make $1,000. But then the problem is once it is up $1,000, and you want to hold it longer and see if you can make $2,000. These things burn so hot and fast that everybody feels like they're smart when they get in. They see themselves make money, and then everybody feels really dumb when they're not paying attention for a couple of hours and the thing tanks right back down. Now you're selling at a loss, and then you just feel like you're the noob. And the fact is, you were the exact person that somebody's trying to get to buy their coins. Somebody who thinks they can get in and out quickly, but you get burned on stuff like that all the time.
Yeah, yeah. It's you know, there's always something to be said, I think, for like inversing inversing the consumer sentiment. And in this era where, you know, everything if everything you learn about crypto is on the internet, then you got to ask yourself how many other people are being like led along this information trail, you know,
Mhm.
where you go, okay, you found a cryptocurrency, you started researching it, or any investment, right? Take your pick. And you start researching it, you look into it, and then you get to the point where you're at that buy decision. And, you know, I've been also, the algorithm has started giving me a lot of marketing content, and you realize like those are not accidental experiences. Like the people who are really good at marketing create these paths that you walk on that end with you purchasing an item, right?
Yeah, the
Whether it's a
sales funnel.
yeah, it's
Hmm.
a sales funnel. Yeah. And
I
it's just
remember BitConnect. You remember BitConnect?
yeah,
The
I've
whole
heard
thing.
of
Yeah.
BitConnects. I never used it.
It was this massive push on social media where anybody who you recruit into the program, they buy their packages or their coins or whatever. There were several of them. There's BitConnect, USI Tech. They were all basically the same thing. It was a bona fide Ponzi scheme, and anybody who knows what a Ponzi scheme is can tell that immediately. You know, pyramid Ponzi. It had elements of both going on in there. But did I throw 800 bucks into it? Yeah, I did because I felt like I would be able to get in and out of the Ponzi before before the whole thing collapsed. And once you're buying into something like that, you realize it's not exactly a liquid investment. I did make money off of it. It did go up in value. And if I were able to sell, I would have sold when I wanted to. But the problem is, you buy into a Ponzi, they put these barriers up to prevent you from getting your money back out. I'm just fortunate that I only put in $800 and watched that disappear. Versus some of these people I saw online, they were cashing out tremendous amounts of money, throwing their savings, taking way too much risk, throwing money into like things like BitConnect or USI Tech. And then you realize, after the thing is over and you see what kind of engagement these Facebook boards and stuff like that are actually getting, some of those people that were cashing out their hundreds of thousands of dollars, they weren't real. They were bots. It's this facade of large numbers of people making these investments to try to get people more excited about it, pump it, share this guy. Look at this guy. He just cashed out his 401k to buy this because he's so confident in how great this investment is. It makes people feel themselves more confident to invest. But it's a farce. Like there were some people doing that. I have no doubt, and you can see it. But I would say easily 75% of the people taking this huge risk were fake. It was just fake profiles, fake pictures, fake conversations between fake profiles. And yet they give this illusion that this is the next up and coming thing. And I know people got suckered into it because you can see them all talking to each other about it. You bring up the word BitConnect in any kind of crypto community, people treat it as a joke now, but there are some people who really got their feelings hurt. The same type of thing happened with Luna just, what was that? February, something, March. The
Yeah.
whole thing disappeared.
Yeah. Yeah. And I mean, it was, I don't know if Terra, like, I think the actual developers of Terra Luna, like, I think they thought it was going to work. Like, I really thought,
Yeah, I think
but
they did honestly intend to create a good product there, but something fell off, and as soon as the thing lost its peg, it was just there was no stopping it.
yeah. Yeah. And if at the end of the day, the best litmus test is just your common sense, you know? And then somebody tells you you can make 20% staking something, it, in maybe that'll work in like Venezuela or something where like where 20% is what you have to make
Mm.
to stay on top of your currency, but like those of us in the real world know that there's no if you could put your dollars somewhere to earn 20%, then someone way smarter than you with way more
We'll be
capital
doing
would
it
have
with
already
millions.
would have already exploited it and gotten it down to the point where it's adjacent to all the other investments, all the other, risk trade-offs
Yeah,
you can make.
it's funny you bring that up because when I was looking at USI Tech, which is really similar to BitConnect, there was some promotional video that they put out, or like watch this interview with somebody or other, and there were these rich people in suits having dinner, and they were they were fielding questions, and they were all about how do you explain how successful this is, blah blah, like real softball questions, and there was somebody in the crowd who asked if you're able to make all this money by trading and you're why are you going after these real retail investors with only a few $100s to invest. Why aren't we going to Goldman and having them invest with us? And the whole board was like, whoa, 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 whoa. They tried to dodge the question, they tried to downplay it, and the answer basically came down to, well, we don't need to. We're already making enough money. And then that was pretty much it. They were like, all right, well, let's get back to eating, and then we'll take more questions after. Huge red flag that somebody asks a valid question. If you can make 20% a year, why are you soliciting investors who only, or no, it wasn't 20% a year, it was 1% a day was what you were guaranteed, between zero point 0.9 and 1% a day. If you can make that kind of return, why are you going after guys that are throwing you $40 worth of Bitcoin? Why aren't you going after the huge institutional investors that would love a 1% per day return? And if you can't answer that question, then it's a massive red flag. And I think that's kind of what prevented me from investing further, is it showed me there's something suspicious going on here.
Yeah, yeah. It's I mean, it's bananas to me that it still works. That like even though there's so many cryptos that are like clearly rugs, and so many, I'm using crypto as an example as like the def, the quintessential, but like you said, there's variants of it everywhere. I'm sure there's an NFT version of it. I'm sure there's
Mm-hmm.
trading platform versions of it where it's so clearly like you said, you mean to tell me that Goldman, who recruits a bunch of MIT, physicists and economists
Mm-hmm.
at the top of their game, none of them have figured out what this scheme is, despite whatever these people are making videos about it, making PowerPoints about how the scheme works. Like, if it really was that good, you would never tell anybody, you know?
When
I,
the average person starts investing, are they going straight to Goldman Sachs's PowerPoints? No, of course not. They're going to TikTok, they're going to YouTube, they're going to Reddit. They're going to find all kinds of stuff on there. If you're a brand new investor, you might think that 1% a day, yeah, that makes sense. That's $1 a day on $100. You don't realize that if you can just run that through a simple calculator, and by year 10, you're going to be at hundreds of billions of dollars. And that does not check out. There is not enough money in the world for every investor who threw in $100 to be a hundred billionaire in the next 10 years. I don't care how innovative your product is. There's going to be some barrier there. Nobody puts out content that would show that. You look at these 1% per day trajectories from a company or from a TikToker, they're only going to show you the first few months. And they're going to say, look, you can turn $100 into 600. And that sounds pretty reasonable. But then you start running that thing further, 10 years, and does it even make sense that I could be a 100 billionaire? Like, I remember people online posting that type of trajectory on Twitter, trying to show people that it's all a scam. And what do people comment and reply? Oh, you just don't understand the product, or your math is wrong. Like, this is very simple mathematics. Run a compound interest calculator. For some reason, people who they want to buy into something they think is going to make them rich, and any evidence to the contrary, look at you like you're wrong, or you're just spreading FUD or something like that. But the fact of the matter is, we got to stay responsible with the investments we make and not get suckered into these these scam programs that might look good on the surface. You dig a little bit deeper, just one layer down, and you realize how much of a farce it all really is.
Yeah, yeah. And the I think the unfortunate reality is that for a retail trader, the information and yeah, the information asymmetry between the market makers and retail traders is like you you can get lucky, right? Anybody can get lucky. But there's got to be a reality that like if you're party to information, something, a strategy, knowledge, an insight into the market that gives you it. If there's something that's going to give you an advantage, it's going to be a razor thin advantage. And that's why even hedge funds have to go to big banks with their hand out looking for more cash. That's why they have to trade on leverage, is because the most brilliant traders in the world, their game changing money making strategies are things that are like, oh, we think we can squeeze 0.1% more
Mhm.
based on the risk adjusted return than the market. Now, if you give us $1 billion, we can churn that into, 10, 20
Million, yeah.
million. But
That's a good point.
like for a retail trader, you're just like your risk, like you can take risks and have potential higher returns, but like that's it. It's just you on a spectrum between the incredibly
Right,
low
right.
risk, low return US Treasuries or YOLOing everything on,
Zero data expiration spy puts.
yeah,
Yeah,
exactly. And it's just
yeah, I
like,
got you.
yeah.
It's funny what you bring up though, because during the freeloader challenge, I've probably gone through 70, 80 different programs and found like five that are actually really worth the time. There are arbitrage opportunities for retail traders, but they're not the type of thing that's going to scale to, it's not going to start bringing you thousands of dollars a day. You might start capping at 40, $50 a day with almost zero risk. Only real risk would be like you enter a trade incorrectly because you weren't fully paying attention, which is a real risk. You kind of mess something up in your input. Are arbitrage trades out there? They're not the type of thing that's going to make you tremendously rich off of it. You just might be able to scalp here and there with fraction of a percent in terms of risk. Sports betting arbitrage is one of those things. I'm going to put out a
Mm,
video on that as soon as I'm done with it. But like, I think that the stock market, like no matter which broker you go to, the price of a stock is the same.
mhm,
Within fractions of a second, they all update at the same time. Sports betting, it can take several minutes for something to adjust to a. They don't adjust to each other. Every sports book is going to have its own odds, and sometimes they're off from each other in such a way that you can play both sides of a sports game and guarantee yourself a return. And usually that return is less than 3%.
mhm,
And you can't drop $500,000 on Mariners Yankees. Like the book won't let you do that. You start getting capped at like a couple grand max.
mhm.
If you're taking 3% of $1,000 on either end, what, $60? I mean, that's a worthwhile amount of money to make after just, a couple of minutes of work entering into a bet. So I've been doing that for the freeloader challenge. I haven't made any content on it yet because I want to aggressively do it. I've just been testing it so far. It does work. But just in advance, I do want to say you're not going to make, you can't make thousands of dollars a day off this. You can make tens of dollars a day, which is still worth the time.
Mhm.
Those arbitrage opportunities are kind of what you're describing, where you're just getting a small amount, not this massive 20% differential.
Yeah, yeah, exactly. And I mean, I think as I do more stuff and, I now consider myself, now I consider myself a businessman, but it's true. It's like,
Mhm.
okay, this is a business, for tax purposes, make YouTube is a business. And I realize I'm like, when you add in things like what is your time worth? Like, does this activity offset, is it superior to flipping burgers at McDonald's for an hour? Can I get more than 15 to $25 an hour from this? You start to realize you're like, oh, there's not a lot of like investing's power in some ways is like that it's a truly passive return, right? You take a little
Mhm.
risk, but you take smart risk, you get a return, and all you have to do is like not pull your money out. Um,
Yeah, which is
And
easy to say. It can be harder to do sometimes. I mean, remember June when stocks dropped like 12% within a month. All of a sudden, that just, oh, hold it and it'll come back up. That got a lot harder. You start thinking, well, maybe if I sell now and buy back in a month, I'll be able to buy back in even lower. That psychology comes into play.
yeah, yeah. No, it's real, but I think that, in terms of like investments, I think now more about like what sort of productive assets can I own? Like I think more about things as like, oh, if I could have a property, right, that I rent out, like it's work, but it'll actually give me a way more consistent return. I'm looking at
Mhm.
doing like Turo, right? Like, okay, could Turo renting a car on this like car share platform, is that gonna actually give me a better return for my time? Even if it means I have to put up some cash and I gotta put in some effort and I gotta like learn some stuff. But like it may be worth it. And it's at some point it stops being an invest. You stop being like, oh, I'm going to invest in this thing, and I'm like, oh, am I just running a business? And I think
Yeah,
more
yeah. I
people
mean,
need to start thinking, or could stand to
yeah.
think in that way.
That's why I got to be careful with the freeloader challenge because at some point, it just, depending on how much effort I'm putting in, it just becomes the side hustle challenge. And you shouldn't be trying to make a living off of your side hustles right off the bat. So it should always be looked at as some kind of supplementary income. That means that you can't be dumping hours and hours and hours into it, such that you would have been better off just actually getting a job. There have been activities that I've done where I'm like, hey, I made 14 bucks an hour basically off of this. It's fine. It's not great. But meanwhile, I got blisters all up and down my hands from picking metal out of a garbage can. Probably would have been better off just doing one focus group in 1 hour, making 100 bucks, versus spending 6 hours lugging garbage or metal out of a trash can and taking it to a scrapyard, only to end up with 90 bucks. So yeah, the amount of time versus the reward has to be taken into consideration. And it's fun to do a bunch of different activities. Your time is valuable and you got to use it responsibly.
Yeah, yeah, absolutely. So, okay, so if someone is a retail investor in this macro environment, right, where we are and are not in a recession, depending on your political bend or
Mhm.
information, what is the thought process investors should have, in your
Okay.
opinion?
Yeah. So first thing first, look at the resources that you have and the type of accounts you're using, and compare that to your investing goals. And I don't mean that in a philosophical sense. I mean literally look at what type of accounts you have available to you, and make sure it's lining up with your intention. So if your goal is to invest and build wealth over long-term periods of time, you do not need a Robinhood account, a taxable account. You need to first make sure that you're investing into your retirement accounts with your 401k and your IRA. You need to make sure that you have a life insurance policy. If your goal is to save for your kids' retirement and you do not have a 529 college savings plan and you're just dumping money into a savings account or into growth ETFs, you're probably not doing enough because you're using the wrong type of account. If you don't have any life insurance at all, but you have a family and you're afraid of buying life insurance because you think it's going to underperform the S&P, all right, that's fine, but remember, life insurance generally isn't an investment. It's a hedge against your own death. You're buying puts on yourself. So get your life insurance policy first to make sure that your family's taken care of. That's going to go a lot farther than the extra 1/12 of a share of SPY you were able to buy each month. So get that foundation underneath you. Get your life insurance plan. Make sure you're using the right type of accounts for your investment goals. And of course, there's nothing wrong with speculating either. But the first priority needs to be getting your money into growth ETFs. And if your risk tolerance is like mine, where it's probably about average, maybe even a little bit below average, throw some dividend ETFs in there too. That way, you're getting your money every month, you're getting a little paycheck, and you're also getting all that growth from your growth ETFs. When that foundation is underneath you, then it's time to start doing a little bit more aggressive speculation. But you can learn how to trade spreads and options in the meantime. Just don't get aggressive with that type of trading until the rest of your foundational finances are all in order. That's my top recommendation.
So it sounds like in the good times, the bad times, the fundamentals don't change.
Yeah, I
Of
mean they really don't. I mean one of the best strategies is to just dollar cost average in over time into equities that you like and meet the goals that you have. You really can't lose if you're just spending years and years and years throwing money into the S&P 500. The problem is you might never actually see any money that you can use until you're old. Traditional financial advice is dollar cost average in until you retire, and then either start converting to fixed income instruments or just sell portions of your portfolio until, to fund your ambitions in retirement. But I think most people now, they don't want to wait until they're old before they start realizing that they have money. Like if you've been doing all the right things for many years, it's okay to start taking some money out or get your dividend ETFs. That way you're meeting your actual goals instead of just dying rich. Do you know what I
Mhm.
mean? I kind of came away from your question a little bit, but yeah, the point is the fundamentals really don't change that much depending on the condition of the market.
Yeah, yeah. And I mean, I think too, I think there's a I've warmed up considerably to ideas about like you said, being 75 a 75-year-old millionaire who, it is like on dialysis or is in a wheelchair and can't leave the house. You're like, okay, what good was this money? Like it's a security, sure, but
Mhm.
I think that's a lot of people's mentality. Especially when you're young and you're like, I'll be 20 forever. Um,
Yeah. I mean, that's what the traditional finance advice is. Throw your money into your retirement accounts, max those out. When you can retire rich. But it's just like you said, I mean, yeah, it might be a little catastrophizing to say you'll be on dialysis and in a wheelchair by
yeah,
75. Hopefully not. There are people out there that definitely have that situation. And what's the point of even having money or working so hard your whole life if you don't get to enjoy it until you start having all these bugs in your system?
yeah,
I'm an advocate for invest aggressively. At some point, you need to start taking a look at what can the money that you have get you on a consistent basis if you just put it into either fixed income or very reliable dividend ETFs. And once you start getting up into the thousands a month, you can probably start shifting the way you look at work and take advantage of that fixed income to supplement whatever kind of lifestyle you actually intended to live, rather than having to slave your life away just so that you can die richer.
yeah, yeah. I mean, I've heard it called buying your time back, which I think is a better, a healthier mentality than like I want to be so rich I never work. Um,
Mhm.
I think a lot of people, especially younger people, should consider investing in more in like concrete skills, and whether that's like you said, like putting in the effort of actually getting really good at trading, or even just how long, like nobody gets rich by investing, or rather people get rich by investing, a little bit at a time, but nobody gets achieves that level of wealth or success without some sort of skill that generates the capital that they then use to invest.
Yeah, I
um
mean, you need something, and I'm seeing how hard it is to start from nothing and build out a portfolio from it. Because my 3K challenge, it's if I lose money on that 3K challenge, that's it. The money's just gone. There's really no way to add to that account. So you either just you go for it and take a couple of big shots, and if they all fail, you're done, or you do it very slowly and steady over time, which is kind of what I'm doing, and it's sort of working out. I have tremendous respect for the people that do have small accounts and are able to succeed from it because I see how difficult it is. I totally agree with your point of view. At some point, you need to fund your investments some way, and the freeloader challenge type stuff is a nice supplement. It's probably not going to do it. My advice would be to make sure you're not majoring in a hobby if you do go to college. Make sure you're actually investing your time into education that's going to bring you a solid salary. And if you're not going to college, learn something that's going to have some longevity into the future. Make sure you're actually learning. You're not just working at 7-Eleven hoping to, unless you're really driving to be like the regional manager of 7-Eleven. Make sure you're investing your time into a trade or a craft that's actually going to bring you some consistent money that's going to keep growing. And I will tell you now that making a YouTube channel between January and October of 2019 did more for me financially than my entire bachelor's degree from 2009 to 2013. and making a YouTube channel was a lot less work, and it cost me a lot less money. Well, would have cost me a lot less money if the military didn't pay for it than going to college did. So investing in a social media creation lifestyle or profession or hobby, that is a worthwhile investment for any young person to get into.
Yeah, I remain shocked at the fact that this is like an industry. I have an agency now. They bring me ad deals, and
Pretty cool.
there's
I don't
a
have one of those.
whole, huh?
I don't have one of those.
Yeah,
I
well,
get emails. I
I'd
get
love
phone
it.
calls.
Yeah, hit me up after this. I'm sure they would.
Yeah.
I'm sure they're always taking new people, even like kind of provisionally.
Dude, I need an agency. I have more sponsors than I can make videos for. A lot of them are just like really crappy products. So I might get 7 sponsorship offers, and like 2 of them are actually worth it. The rest are like some janky, or just not really a good product in general. Every once in a while, you get something really good. But I could use an agency that's doing all that filtering for me.
Yeah, and that's what they do for me, and it's great. I mean, it's great because like, yeah, we actually just log into the same email account, so I can see everything, all their back and forth, and yeah, they're solid about filtering out
Dude,
scams, and
yep.
they do
Yep.
bulk negotiations. So like, there's they will say, hey, we'll bring we'll go to a company. They'll be like, hey, we know you have sponsorship money. We can reach 100 million people, or we can reach 4 million people in a month, but it's going to be across a dozen creators. And those
Oh, okay.
deals tend to, obviously, like, it's just less work for the actual company than, they don't have the time to sponsor, you know, a guy getting 50,000 views of video, you know.
Yeah, they don't want to be doing that to dozens of people. It's not worth their time. Just do it in bulk. All right, so you're gonna hook me up with the contact information for these people, or send them my
Yeah,
channel or whatever. Let's see if
yeah,
we can
yeah,
get in
yeah,
touch.
yeah,
'Cause
yeah. I
okay.
suspect, based on what Discord has told me, I suspect you may know, um,
Okay.
because we're in a mutual server. But
Okay.
okay, so yeah, I think definitely if you're like a young person, and content creation, I think is actually, like, you wish it wasn't, but it's the modern marketing, It's
It is. I mean, think about it. You want to run a traditional campaign on radio or TV or whatever else. That company that's marketing that campaign, they're not going to get any conversion numbers. They're not going to see how many people click this link or what demographic they're coming from. They're just throwing their stuff out there on the radio. And they've got no idea what they're actually getting back. How much of this is from word of mouth versus how much of this is from my ad. But they can see all those numbers off of a YouTube creator. They can see how many people clicked that link. They can see their demographics. They can see what kind of conversion they had. It's a lot better for them. And for us as the creator, there's fewer middlemen involved in it. So we are highly motivated to actually take those types of sponsorship deals. I think the problem comes in when, like what I did with that like lithium stock or something like that. I was like, oh, they're paying me generously. All I have to do is give this meaningless endorsement that everybody's going to obviously see is just me paying lip service so I can get paid. By saying, oh, this is, if you're a speculator with, a high risk tolerance, this is an interesting stock to add to your watch list. Like when I say something like that, to me, that sounds like, all right, this guy's just saying something, and I would not really pay attention to that part of the YouTuber's video. But then after I did that, I had people texting me asking me how to invest in this penny stock, like people I know from real life. And that's when I realized people that like you and trust you, they're not really going to ask too many questions. They're just going to invest in what you talk about. So I realized at that point, this was about a year and a half ago, I really do need to be cautious about what I tell my viewers about, because they will click on things just because I mentioned them.
Mhm.
A lot of people, I think, will not adjust after the first time because they really enjoyed getting paid when they just made this meaningless endorsement that people actually ended up clicking on. It's easy to get suckered into chasing the money. I'm fortunate enough that I'm not in a desperate situation to need to do that. I can now be selective about who I work with as far as sponsors go, but it will always be that mark of shame for me that I tried to give a worthless endorsement that nobody would take seriously just so I can get the money. And people actually, I'm sure somebody out there lost money because I talked about a stock that ended up being completely worthless. So always going to be a point of shame for me.
Yeah, 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 the power of social media marketing, especially when, viewers feel like we as creators, like they feel like they have such a stronger relationship to us than they do certainly almost every company, but even things like actors and
Mhm.
actresses. Like I think about in the 90s, right, growing up, it was like, oh, you would profile this pop star in Vogue, and that was as close as a parasocial relationship you could get. And it's like now viewers pop in and they see, you or I for hours a week. And yeah, that's the strength of that relationship is tremendous. And I realized, like, yeah, when I first started getting like real brand deals, and I was like, oh, like, wow, there's no way they're returning value. And now I'm like, I must be the sucker. Like, I think they're getting 10 times the value from these
Yeah,
endorsements.
you probably are. A
Yeah.
friend of mine sent me a video on like how this typically works, and you might think, all right, $1,500, that's a good sponsorship, and you realize the amount of money that you're generating for the company is like tens of thousands. Like you're getting a fraction of it, but there's a power imbalance between the marketer and the creator. We're not gonna be able to bridge that gap. I mean, there's probably somebody out there who can help you do that, some kind of producer, but now you got to pay them. So, you never really know what you're gaining doing something like that.
Yeah. I mean, I think bridging the gap would come down to launching your own product, and sponsor yourself
Yeah,
basically.
it would. Yeah, basically.
But
And that's what Patreon aims to do. But even then, you're paying Patreon,
yeah,
and
yeah,
you are the only person making content for your Patreon channel. So you need to. It's you're adding one more thing for you to do rather than just add a 1 minute integration into a video.
yeah, yeah. I mean, I definitely like want to move into like I have a YouTuber's course and it was pretty successful when I talked about it in the videos. Um, I I like beta tested with some people and I think I can make something better. But I realized I'm like, oh, if I don't have a sponsor for a video, like I should just have something that I think has value that I own entirely. And again, I think a course is good if I got to adjust some dials. The Patreon, when I talk about it, it does return a lot, especially when I make a decent value proposition. Um, so yeah, it's just a testament to the fact that you're like, yeah, just the value of creator marketing. And even if a young person who got into content creation never like, took off or blew up, it's like if you can learn how to do it, that skill itself, I feel like is something you could go to these companies and be like, listen, your whole marketing department is just social media people. I ran a successful TikTok. I ran a successful, Instagram account or a YouTube channel. Like I
You can get
know,
hired.
yeah, how
Yeah.
to talk to these people, how to do this stuff. I mean, that's
Even
why I
just
think,
knowing, even being good on camera, not being afraid to talk on camera, that alone is worth something to somebody. Because if you can express yourself, you can explain your points of view, you can do it in front of an audience without shaking or asking for help. I think that alone is something that's very hard to teach people how to do. If you can start off your real professional career by already being able to do that, then that puts you a few steps ahead of any of your peers.
yeah, yeah, absolutely, absolutely.
Point is, yeah, if you're looking for something that's going to start bringing you value, maybe you're a young person, you don't really know what you want to be when you grow up. Seriously, make a YouTube channel. Just find something interesting to talk about. Get decent at making thumbnails and editing. I use Vegas Pro. You will not go wrong. It will not be a waste of your time to know how to make a video and upload it. It's easy, and it you are going to get some views. And if you make good enough content, you can become a YouTuber, and you can make that your whole job if you want to. Just there is no upper limit to how far you can go with it.
Yeah, and I think that's true of a lot of like entrepreneurship in a way that investing doesn't necessarily give you. Like it'll let you grow money you already have, but if you can have some sort of business, some sort of enterprise, the sky is the limit to that sort of stuff.
Of course. But with social media creating, there's no real financial risk to you. At most, you're going to pay $40 for a course to learn how to use some editing software. But you generally aren't going to need to sink thousands and thousands of dollars into starting your own YouTube channel. Whereas if you want to be a uh, drop shipper, you might, or fulfilled by Amazon, that FBA type thing trend going on, you do need to start by putting your money on the line. And that might be too much risk for somebody who doesn't have a whole lot to begin with.
Yeah, yeah, that's very true. That's very true. You can make money You could start a business by being smarter than everybody else, working harder, or just having capital or some combination of it, right? It's like,
Yeah, kind of pull the
you know,
Musk.
yeah, yeah, exactly. You know,
Or you
he
know what? Or just join the military and all of your money will be discretionary income. Like you have virtually no expenses. If you want to jumpstart some kind of entrepreneurial career and you don't have any money, join the military first and pursue whatever entrepreneurial ambition you have, knowing that all of your needs are already taken care of and any money you get from your paycheck is yours to do with what you want.
It's true. It's true. And you might even learn some valuable skills in the process.
Yeah.
All right, so we
There you go,
are
my friend.
right at an hour. Um, any
Quick
shout
hour.
outs you wanna make sure we give?
Yeah, join Discord. It's 100% free. So we've got the Theta Gang Discord going on. We've got channels for talking about trading, the Freeloader Challenge. We've got my Patreon channels there. We've got some channels that are for moderated discussions specifically about certain strategies. Whatever you want to talk about, we've probably got a channel for it. And you've got thousands of people that are ready to help you learn whatever it is you want to do. If you want to grow your own account using some kind of aggressive strategy, there's somebody else who's already done it before and can give you some advice. If you want to be conservative about it, there's plenty of people doing that there too. If you want more access to me and you want to see what I have to say, there's plenty of channels where you can reach me. I'm on Discord every day. So join the Discord. I think there's going to be a link in the description. And again, it's 100% free. And if you don't like it, you can always just bounce. But I'm pretty confident that if people come and check it out, get an opportunity to bounce some ideas off of other traders with like-minded ideas, then you'll be very happy with joining up.
Yeah, and like I said, we'll put the link in the description to the podcast here. We'll also link to your channel, Kamikaze Cash. And yeah, once again, thanks again for coming on. It was great having you.
Thanks for the chat. Appreciate it.